Hello, my name is Nick Quinn.
Hi, I'm Connor Woods.
Hello, I'm Shane Vernier, and we're the market analyst team at howtotrade.com. Together, we're going to explain everything you need to know about trading the harmonic crab pattern. All right, let's get started.
The crab harmonic chart pattern is quite a unique chart pattern and it helps traders find market reversals. It's one of the harmonic series of chart patterns and is considered to be very accurate and reliable. It was discovered in the year 2000 by Scott Carney and is similar to the butterfly chart pattern. The key difference from other harmonics is that the C to D leg has a longer extension, placing D much further away from X. It can be seen as both bullish and bearish, but usually marks the end of an existing trend and the development of a new one. So let's take a look at exactly what we need to see in the price action to identify it properly. This is the basic structure of the crab harmonic chart pattern, and it is quite unique among harmonics simply because of the elongated leg that we have from C to D. 5 points, as with the other harmonic series, X, A, B, C, and D. We're looking to search for to define that point D through a combination of various different Fibonacci ratios. The first thing, once we've had the initial impulse from X to A, is to define our point B, and that must sit between a 38.2 and a 61.8 retracement of A to X. We then look to get point C, which must be a retrace of A to B, and that must sit within a zone of 38.2 to 88.6 of A to B. We then need to then project downwards to get that point D, and it must be below point X as well. And we get there from two measurements. The first one is an extension of the X to A leg here that you can see here, and that projects down to 161.8%. And then we look to take an extension move from the B to C leg, project that to the downside, and then we get 224% extension or 361.8. So big measurements there from B to C to project downwards. Once we've got those conditions in place, we can then look to trade that to the upside. But as I said, it's important to remember that point D, it has to have that extended leg from C to D, and it must be below point X. But that is the basic structure of a crab harmonic chart pattern, and that's how we'd identify it in the price action.
So let's have a look at how we can trade this crab pattern. Now, as always with these harmonic patterns, we're looking to enter at that point D level, and I'll show you where theoretically we're going to use our stop loss and take profits in these examples. So it's been explained before how we sort of identify them. When we get this pattern up on the chart, as you can see now, with our entry level around point D, generally speaking, we want to use some sort of confirmation, whether it's a MACD, RSI, Fibonacci. So in this example, we can see we've got that RSI crossover around where that point D is formed. That's where we draw that point D because we've got that RSI crossover. So that's our entry level, which is step one. Now, the stop loss is actually quite difficult in this in the crab pattern because we can't just use point X like we've done previously. We may want to use Fibonacci's from the more expansive move, or we can just use it below the most recent swing low, just somewhere below point D here. It's not as clear as other harmonic patterns, unfortunately, but the targets, again, we can target point C and point A along the way, and we can see with this trade we traded in profit, then in a little bit of loss, and we targeted this point C around a 3.8 risk reward trade, and we actually went on to yield a fantastic 5.8 risk reward trade from this move, and that's where we can target for our take profits. So that's how we use this crab pattern in our trading.
Here are a few of the key pros and cons for the crab harmonic pattern. On the pros side of the ledger, the pattern is extremely accurate. It also provides traders with excellent risk versus reward ratios. Lastly, its take profit level is well defined. Now, a few of the cons. Trading the harmonic crab pattern could be complicated for beginner traders. It's not necessarily easy to spot. You can see it's difficult to find and identify on trading charts. It's an involved pattern. You have to take time and have some expertise in how to spot the crab pattern. And also, there's no clear level for a stop loss. So theoretically, this is going to take a lot of risk, a lot of capital to trade the crab harmonic pattern properly. Now, let's review some of the key takeaways from the crab pattern. The crab pattern is an extension harmonic trend reversal pattern. It helps traders identify the beginning of a new trend. The crab pattern, which can be either bullish or bearish, has 5 points, 4 price swings, and unique Fibonacci ratios. Number 3, two variations similar to the original crab pattern are the bearish deep crab pattern and the bullish deep crab pattern. Number 4, when the crab pattern appears, the trader may enter the market at point D. Number 5, stop loss orders are placed at the closest Fibonacci level. Number 6, take profits could be placed at each one of the crab pattern's points, X, A, B, and C. Now, if you want to learn more about the crab pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you how to fit crab patterns into your own trading methodology. We'll then demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to gain valuable market experience. And once you're ready, feel free to join our How to Trade Funded Trader program.